Hey everybody, Smart Silver Stacker here. Hope you're doing well. Happy Labor Day to everybody out there. I hope you are enjoying your Labor Day weekend. Got some interesting news today, and that is Bloomberg is reporting that Turkey has formally requested to join the BRICS organization, the BRICS Union of Nations. Now, this is an interesting development because it goes to show you how complicated the geopolitical situation is becoming. And this is interesting for a variety of reasons, not the least of which is that Turkey is actually a member of NATO. So you've got the first potential NATO member joining the BRICS organization. And, of course, the BRICS organization is more of a economic union. NATO is a military alliance, but in this era of fifth generational warfare, the global economy is just another battlefield that has been weaponized. So, I think that this kind of shows you the way that the sands are shifting here, and this will have some significant implications for gold, for silver, for the status of the US dollar. We will explore those in today's video. I see a lot of people chiming in the chat. Some good comments already. Turkey loves silver. Yeah, that's true. Turkey has a serious inflation problem. Also true. We'll get into that and, what some of the currency outcomes of this expansion of BRICS could mean. There's a lot to talk about here, so buckle up. I hope you got some free time on this Labor Day, because this could be a little bit of a lengthy one. There's a lot to go over here, but before we delve into the details of this story, real quick, check out today's video sponsor, sdbullion.com, if you're in the mood for some real money, some real dollars, if you will, not the fiat kind that we have to worry about, being the world reserve currency and all this, but the real kind, the kind that were minted 1964 and earlier, that are made out of silver, the kind described in the Constitution. Right now, you can still get junk silver for a very low premium over at SD Bullion, about $22 per $1 face if you buy these $10 rolls. I view this as one of the most undervalued monetary assets in the world. Not financial advice, but check them out with the link down in the description. All right, so getting right into this, let's go through this Bloomberg article to get started, because there's a lot to unpack here. So this is according to people familiar with the matter. So some kind of sources here have revealed that Turkey months ago put in a bid to join BRICS and to forge new ties beyond its traditional Western allies. And Turkey has been a member of NATO, I think, since the early 1950s. So a long history of alliance with Western Europe, with the U.S., but things could potentially be changing. And they've always been kind of the odd man out, at least in recent years. They maintained a close relationship with Russia following the Russian invasion of Ukraine 2 years ago. And that is sort of breaking away from the other NATO members. So, Turkey's always been kind of this interesting entity. They straddle both Europe and Asia. So they find themselves sort of at the crossroads here between these two major regions. And one of the reasons is that Erdogan, president of Turkey, at least according to this article, is that he feels that the geopolitical center of gravity is shifting away from developed economies, and that they are heading towards a multipolar world. Now, a lot of people will cast doubt on whether or not we are headed towards a multipolar world or not. However, actions of nations like Turkey seem to confirm that we are. At least that is what they believe, and that is why they are potentially throwing in their, fate with the BRICS organization. Now, also, it's interesting that part of the reason that they're joining BRICS is because they've had a difficult time joining the European Union. They've been trying to join the EU since back in 2005, but they've had a lot of issues with that. So, maybe BRICS will just accept them. And very likely, I think BRICS will. I don't see any reason that BRICS wouldn't extend an invite to Turkey. That is going to be a significant addition to BRICS. And as they attempt to sort of create this anti-Western hegemon, Turkey should be a valuable ally in that regard, and we'll talk about why in just a few minutes. But to wrap this up, there is a BRICS meeting this October in Russia, and it's very possible that Turkey could be joining as early as October. That's just next month. So by October 22nd, you could have the addition of Turkey to the BRICS organization well underway and in the works. Maybe by 2025, they might actually be full members. And that would mark the second major expansion of BRICS. You know, we had a number of nations join BRICS at their most recent meeting, among them Saudi Arabia, very notable, the UAE. So, you know, BRICS is expanding. Iran has joined. Now, here they mention again that Turkey has been trying to join the EU since 2005, but one of the reasons they have had difficulty with that is what the EU describes as Turkey's democratic shortcomings. So very unlikely that, at least for that reason, the BRICS nations would reject Turkey. They seem to not really be too concerned there with the internal affairs of member states. They prefer to leave that to the member states to determine how they do that. You know, sort of a mixed record of human rights and democracy in the BRICS nations. I'm not saying that, you know, the Western nations are angels or anything, but, you know, just that's factual. So Turkey believes that joining the BRICS could help the country improve economic cooperation with Russia and China and become a trade conduit between the EU and Asia. And this is a good reason why it's in the best interest of Turkey to join. Simply, if they can take advantage of the Belt and Road Initiative via China and use their geographical location to facilitate the gas trade. Of course, Europe largely cut off from that due to the destruction of Nord Stream 2. Now, who's responsible for that? If you ask Seymour Hersh, it's the CIA. If you ask I forget where the most recent piece was published, the New York Times or something like that, where it's some crazy story about Ukrainians going out on a yacht and blowing the thing up. It doesn't really matter, though, because the beneficiary will be nations who align themselves with BRICS, such as Turkey, and all that cheap Russian gas can flow through their hubs, and they can get a cut, and they can profit from that, and also secure cheap energy, which, you know, Turkey has had a significant inflation problem, so getting cheap gas from Russia is one way that they can help to resolve that. Now, also, Erdogan's administration is trying to integrate with Chinese electric car makers, and this goes to show you again that the global economy becoming very integrated, and they're looking for partners outside of the West. Part of that may be because the West is not viewed as so friendly any longer to potential partnership and investment following sanctions. Also, that from a geopolitical standpoint, Erdogan sort of differs from many of the other NATO members in that they have even gone so far as to mention intervening in Israel's Gaza war. Now, what that would mean, I think, is kind of left up for interpretation. That was back in July, but certainly they take issue with U.S. backing of Israel. And the situation in the Middle East is very complicated, but this could also be a motivation for them to move away from the G7 and NATO and more towards perhaps more geopolitically friendly allies in the BRICS nations, of which, again, Iran is also a member now. So perhaps closer ties coming there. And in terms of global economic advantage and size, I mean, look at this chart. This is from Statista. This blue line here is the BRICS portion of global GDP. The black line is the G7. And you can see that from 2000 to today, there's been a marked shift. And now the BRICS represent a larger portion of global GDP than the G7 do. And that, as they continue to expand, is a trend that will continue. And this gives them a lot of leverage when it comes to policy and when it comes to doing business. Part of the reason this is so dangerous for the US dollar is that one of the principal goals of the BRICS organization right now is to reduce their dependence on the US dollar as a currency for facilitating bilateral trade between member states. So they're trying to get away from that. They're trying to use more local currencies. Another thing that potentially they may be looking at doing is using a form of gold or gold-backed currency. Now, that is speculative, but I believe that we may hear more about that in October. And there are some signs to indicate that these BRICS nations are looking at gold as a very important asset. And, the addition of Turkey here, I've got the GDP by country pulled up. So if you look at the U.S., number one, largest GDP, China in the number two position. Now, Japan, to put this into context for you, is just over a $4 trillion economy, $4.2 trillion. Now, you go all the way down to the 19th position. That's Turkey at just under $1 trillion, but still, I mean, this is just two positions away from Saudi Arabia. It's a bigger economy than Sweden, Poland, Switzerland, Argentina, Norway, Belgium. Those are all countries that have a smaller GDP than Turkey, the UAE, Israel. So Turkey is by no means like a lightweight country. They have a significant GDP, nearly $1 trillion. And that is a big chunk of global GDP to fall into the BRICS camp. Now, one of the reasons I believe that nations are joining the BRICS organization is because they feel vulnerable to the status quo. They're worried that if they find themselves on the wrong end of the geopolitical spectrum here when it comes to U.S. foreign policy, they may be subject to sanctions. And an example of that is the massive sanctions which are being imposed on China in regards to them funding Russian war efforts. So China called these new sanctions on its entities over the Ukraine war, quote, illegal and unilateral, and, quote, not based on facts. That was last Tuesday before National Security Advisor Jake Sullivan visited Beijing. And this was following the United States imposing sanctions on more than 400 entities and individuals for supporting Russia's war effort in Ukraine. And the U.S. is also working on a package of sanctions to target Chinese banks for the same reason. And so, there's something like safety in numbers here. When Russia got cut out of the global financial system, they have, for many purposes, adopted the Chinese yuan as a main currency for facilitating trade between themselves and their partners, such as China. And you've seen the U.S. dollar be almost completely eliminated from their economy. And the BRICS organization, they are concerned about U.S. foreign policy, the weaponization of the dollar. So regardless of how you feel about that, that's important because, we transact in dollars, we get paid in dollars if you live in the U.S., and the dollar is the world reserve currency. But there is a trend of de-dollarization. Doesn't mean it's going to happen tomorrow. Doesn't mean it's going to happen as soon as Turkey joins BRICS. But that is the trend. And it doesn't just take the weaponization of the U.S. dollar to make those who are holding dollars and holding U.S. denominated debt, those who have invested in U.S. treasuries, foreign holders, to be concerned about the dollar. It could also just be the massive profligate spending and money creation in Washington. Now we have $35.28 trillion in the national debt over a $2 trillion annual deficit. And there are many out there, I suspect, who are just looking at that and thinking, clearly the U.S. can't pay this back in anything other than devalued dollars. So they see the writing on the wall and they want to have some alternative in place before they either, one, get cut out of the dollar system, or two, before the dollar system implodes because of this massive systemic debt crisis. Nations around the world, more than $90 trillion in debt. The U.S. alone racking up $2 trillion of debt per year. And to top it all off, we got $218 trillion in unfunded liabilities. So basically guarantees that the massive debt expansion will continue, barring some kind of major reforms, which don't appear to be coming and are likely just politically unviable. So they won't be coming anytime soon. Now, I wanted to take a look at this data from the World Gold Council. This is regarding the second quarter 2024 changes in gold reserves. Now, you'll notice the second largest increase here is from India, also a BRICS member nation. They are the I in BRICS. But then Poland is in number one. And then number three is Turkey, buying 14.63 tons of gold in the second quarter of this year. So they just bought a lot of gold. They were the third largest purchaser in 2024. clearly they are concerned about something, right? You don't just go buy gold because everything is fine, right? They are likely concerned about winding up on the wrong side of the geopolitical, conflict that is emerging. And certainly Turkey probably has more to worry about there than any other Western ally, or at least, they are potentially one of the first on the chopping block, considering the fact that they have maintained relations with Russia, etc. So, they're stocking up on gold. And this goes to show you that that's part of the transition to the multipolar world, is large purchases by central banks around the world of physical assets, gold. Now, why are they doing that? Well, because if the dollar is no longer a currency that you view in a favorable light in terms of trade, you're concerned about sanctions. What's one form of money or currency that can never be sanctioned? Well, it's gold, or at least it's very difficult to do so. An example of that is from this article from The Conversation. They have some interesting stats here regarding Russian gold. So Russia is the world's second largest producer of gold. And we all know, following the 2022 invasion of Ukraine by Russia, the West seized a huge number of Russian dollar-denominated assets. But one thing they couldn't seize was their gold. They've tried to sanction that. I think the UK won't buy Russian gold. There's a few other entities that have sanctioned that, but that is very difficult because, if you buy gold from Russia, you melt it down, you put your country's stamp on it. Who's to really say where that came from? Very difficult because gold is fungible, and in one gold bar, whether it's made in Russia, the US, China, it's still chemically, atomically just gold, right? So it's very difficult to sanction these things. The UK, the United States, and Canada, according to this article here, will not touch Russian gold. But look at this, the UAE, another BRICS member, by the way, now, a new member of BRICS, part of last year's expansion, they imported 96.4 tons of Russian gold in 2022 following the British sanctions, about $6.2 billion worth. That is up 15 times from 2021 imports. And then also Switzerland imported 75 tons of Russian gold in 2020. That was in 2022. In 2023, it imported about $8.22 billion in gold from the UAE, which doesn't produce its own gold, but it buys it from Russia. So again, just because they're not buying Russian gold directly, you might be buying it on the secondary market. They also imported $3.92 billion worth of gold from Uzbekistan, Russia's neighbor and adjacent country. So some of that certainly could be from Russia as well. And, I wanted to take a look at this too, because all these countries, they're importing gold. Russia, China, Turkey. China, allegedly took a break from importing gold in Q2. I don't necessarily know that I buy that. I think maybe they might be buying surreptitiously. But in 2023 and the first quarter of this year, they were buying huge amounts of gold. In 2023, China, the world's number one gold producer, was also the biggest importer. So these BRICS nations, they are importing large amounts of physical assets. And again, that is because they know that the writing is on the wall when it comes to the dollar. India, second largest purchaser in Q2 2024, again, of gold. So all the BRICS nations, they're loading up on this stuff. India is also investing in importing in huge amounts of silver. So this report from Reuters here from last week reveals that India's imports of silver in the first half of 2024 jumped to 4,554 tons. The same period last year was 560 tons. So that is a huge increase, according to data from India's trade ministry. And the point here is that as nations continue to join BRICS and continue to look for alternatives to the dollar, yes, there could be some kind of fiat currency, some kind of a BRICS basket of currencies, but more likely, I think, is that they'll simply rely on the traditional money, the traditional no counterparty risk asset, which would be both gold and silver. And, I guess to finish today up, we could take a look quickly at the chart of gold and silver. Let's start with gold. So I had originally forecast that last week could be a big one for the precious metals. Turns out it really wasn't. It was almost a complete nothing burger. If we zoom in and we look at gold, gold was down 0.36%. Thank you, Jeff Thule Tiger Thomas, for being a member and for supporting the channel. Thank you to everybody, by the way, who tunes into these live streams. Do me a favor. We'll get back into gold and silver here in just a second. But if you're watching still, if you've stuck around this long, hopefully you're enjoying the video. Do me a favor. Smash that like button. Subscribe to the channel if you have not done that yet. And now let's get back to the chart. So I had suspected that, there's a lot of economic data. We had some Fed president speeches. I thought maybe there would be a catalyst in there to drive gold and silver to the next phase of their breakout, which they have been in the midst of for the majority of this year. Both metals up significantly year to date. But then we didn't get that. Gold dropped 0.36%. A lot of the data came in basically in line with expectations last week. So nothing rocked the boat. And it was a very similar story in silver. We did get a little bit of hawkishness, I guess, from Fed President Bostic, who gave a couple of speeches. I think that might have put a little downward pressure on the metals. Silver was down 3.24%, so fared a little worse than gold. But again, listen, when I make short-term forecasts, please don't act on those without doing your own due diligence. This is all just my speculation, especially in the short term. I'm just, giving you my thoughts. And we got some weakness in the metals, really kind of a nothing burger. Silver is in the midst of consolidating here. Gold remains near record all-time highs. And this week, again, could potentially have some impacts for this. Geopolitically, there's always the potential for, a major escalation or some kind of a factor to drive gold or silver higher. And that is evidenced by this story that Turkey is joining the BRICS organization. You can see that the geopolitical situation is getting very complicated. And, one thing that is kind of alarming about this is that we're beginning to see the geopolitical situation kind of resemble, I think, what we had going into World War I. Things are getting complicated. You have these systems of alliances. You have small wars, small regional conflicts at the moment, but those threaten to escalate and draw in the major powers here. And again, you're kind of seeing that with the tide shifting and traditional Western allies moving into what might be viewed as the BRICS camp. Same with Saudi Arabia. Saudi Arabia is another one of these nations that's sort of a Western ally, but they're drifting closer to Russia and China in their sphere of influence. So things are changing. We appear to be on the cusp of some major changes. Doesn't mean it's going to happen this week, but could happen at any time. And also, the global, or the U.S. economy, rather, we already looked at the debt clock. This is a mess. We have an election coming up, so anything could happen. We will get later this week the jobs data, another non-farm payroll report. You remember the most recent one was what sent the markets for a real loop. So keep an eye on that as we move forward here. And just keep your head on a swivel when it comes to these developments, because things are happening quickly. And while, there's a lot of distractions out there, the election, whatever's in the news, celebrity stuff, they're trying to keep us distracted with bread and circuses from what is really happening beneath our noses, and that is that the underpinnings of the U.S. dollar as the world reserve currency are being eroded away. And in the long run, that is going to be very bullish for gold and silver, at least in terms of their U.S. dollar pricing. And, you might want to take a playbook or a page out of the playbook of the BRICS organization, get your hands on some physical, tangible assets, the kind that are, basically an analog backup to our digital fiat system, where everything is very vulnerable, either from sanctions or from geopolitical, escalation, or from cyber attacks, or from glitches. There's a lot of reasons out there to not have all of your faith in digital fiat wealth at the moment, at least from my standpoint. Not financial advice, just giving you some thoughts on what I'll be doing to get prepared in light of these developments. But I hope you enjoyed this live stream, everybody. If you did, smash that like button. Do me a favor, leave me a comment down below to let me know what you think about all of the various stories that we covered in this stream, and I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker, out.